Hello and welcome to this Forex Preview at xm.com. We'll be discussing Bank of Japan Governor Kuroda's last policy meeting and the potential reaction in the yen. I'm Maria Prashurdes, and joining me is Senior Investment Analyst Harlem Bospiceros. So Harlem, on Friday, Governor Kuroda will hold his final policy meeting at the Bank of Japan. How do you think he's likely to pass the torch to the incoming Governor Kazuo Ueda? Will it be a quiet transition, or do you think he might take more tightening steps at this point?
Hello, Maria. To be honest, I believe that the bank may decide to wait a while longer before taking the next step towards exiting years of ultra-loose monetary policy. First and foremost, I base my view on economic data. Yes, wage growth surged to above 4% in December, exceeding inflation and thereby resulting in positive real wage growth for the first time since March 2022. But just on Tuesday, data showed that Japan's cash earnings for January slumped to 0.8% year-on-year from 4.1%, taking the real growth rate to the lowest since May 2014. What's more, last week, the more forward-looking Tokyo headline CPI for February slowed by a whole percentage point, while the excluding food and energy rate just ticked up to 1.8% year-on-year from 1.7%, which is still below the Bank of Japan's 2% objective. What also adds credence to choosing patience for now is the fact that the Shunto wage negotiations have yet to conclude. So, Kuroda may decide to pass the torch to Ueda quietly. Even Ueda himself, who just last year highlighted the difficulty of maintaining yield curve control as inflation bites harder, just after his nomination, added that inflation seems mostly fueled by surging import costs of raw materials rather than strong domestic demand, showing no urgency to act. Apart from Ueda, several other active policymakers also said they see no immediate need to take additional steps. Having said all that though, even if there is ample reason for Kuroda to step down silently, the Bank of Japan's quarterly survey for the bond market showed that an index measuring the degree of the market's functioning slipped to a new record low in February, which means that the widening of the yield band by 25 basis points in December has failed to reduce market distortions. This may have allowed some participants to increase their bets that officials could eventually decide to raise the yield cap at this meeting.
Okay, so if the bank does decide to wait a while longer before taking further steps towards normalization, what reaction might we see in the yen?
Now, if indeed the bank decides to wait for a while longer, those expecting action at this gathering will probably get disappointed and the yen could slip, especially against the dollar, which rallied after Powell's hawkish remarks on Tuesday. However, it may be too early to chalk up the sponge on the yen. Despite not being in a rush, officials have repeatedly signaled that they stand ready to adjust policy when deemed necessary, with Ueda saying that he already has ideas on how the central bank could exit its massively stimulative policy. Therefore, it may be a matter of time before policymakers decide to further remove accommodation. For the yen to stay pressured for long, the Bank of Japan may need to maintain a dovish stance beyond April, when other major central banks like the Fed and the ECB continue to raise interest rates to higher than previously estimated levels.
Harlem, thanks so much. And thanks for joining us for this Forex Preview at xm.com.